Just a reminder, nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Good morning, guys. A new monthly opens, and we prepared the stats for that. So let's put them on the chart and see where our monthly levels would be. I also marked out the previous month wick, mainly the 50% level of the wick, simply for the reason that often wicks get filled around 50% plus minus, and if price stays in this area, it remains as a bullish retest. And of course, if it starts to go lower, then the next level would be an SFP of this low, but we go level by level, and the 50% would be the first area to watch for. Now let's mark out the new monthly average. For the month of December, we can see that there is around a 50% chance of closing positive or negative, and the average gain for positive months is 34.83%, while the average loss is around 13%. The bullish wick on these months is on average around 7%, and the bearish wick formation around 5%, with the median a bit smaller. So not really big wicks to the upside for bearish months. The average time for the bullish low formation is around 5 days. Here we need to note that a few times it was really early in the month. Only twice it happened closer to the second half. But if we take them all together, only one was later in the second part of the month. All the other times, the low formed very early in the first week. That means the move down usually happens early to form the monthly wick. For the downtrends, the low was formed on average around 14 to 15 days, exactly the second half of the month. That means often we see price rising first to form the high and then the move down. Overall average is around 8 to 9 days. That's the timing window. This window is interesting because we have something in this time window as well, which I will show later. Now for the highs. In downtrends, the average high is formed around day 4 to 5. Very early as well. The overall average is around 2 weeks. For downtrends, it was early several times, sometimes even in the first days. So we have this situation now, the highs and lows with a 50% chance for either positive or negative closes. That's not very helpful yet, but once one of them is formed and price moves outside the average time window, then we can say the continuation in that direction becomes more likely. And the high in downtrends gets formed after the second week of the month, on average 16 to 17 days, which means if we see a new high formed after the first week of the month, the chance increases that the low was already formed, and we can expect a positive monthly close, unless price moves below the monthly low again. Now let's see how the levels look on the chart. So that's the average for the month. We can see the average loss would be around 78K, basically another SFP of this current low and filling half of the monthly wick on the left side. The bearish wicks on average would be around 93 to 95K, which means if price starts moving above that, the chance increases for higher prices, because this level aligns perfectly with our current SR level that we will look at after that. For now, we can see that for a bearish month, we would not expect a big wick to the upside and then a breakdown. Based on averages, the downside move is not really big, and we would not see a move below the monthly swing low or a real breakdown from here. Of course, if more volatility kicks in, then we can see moves outside the averages. They are still averages in the end of the day, but that would be new information. For now, these averages are the prices where we could expect moves based on history, and very often they get respected around their areas. For the positive closes, we have an average bullish wick of around 6 to 7%, which would bring Bitcoin to around 84.2K, basically the same area as the bearish median wick and also our monthly 50% area. This would mean price moves down first in the first days of the month to form the low and then makes its way higher. If we then see it break the average time window for the high in downtrends and break the bearish wick SR level, we could expect price to move higher toward the average gain of the month, which for December is 34%, with the median even higher at almost 40%. That would bring Bitcoin to around 121K, near the all-time high. I drew these out here so you can see how it would actually look on the chart. So that's the example based on the averages of how a bearish month would look. We see the wick to the upside and then a close around the average monthly close, basically a range between the 80K area and mid 90K area. No real breakdown, just a month of ranging. And for the bullish side, we can see the move down in the early stage of the month, forming the low of the month and breaking above the resistance and making its way up. Now, will this monthly candle be 34% big? I can't say, but what I can say is that the average shows it's possible. Same as it was last month. It was less likely to hit the lower average, but it still did, and even went below it. I've also seen in the past that bullish months respected the averages perfectly and even exceeded them. So it's still possible, both to the downside and to the upside. And based on the averages, we have a potential monthly range where the low forms in the early part of the month and the upper range sits around a new all-time high. So we actually have two very different scenarios. One, the range month scenario, a likely range between 93 to 95K and the low 80s without a real breakdown. A moderate range of around 15 to 20K, basically consolidation. Two, the full bullish expansion scenario. A big move to the upside that takes back the entire drop and starts squeezing the short positions that built up on the way down, moving toward the 34% average gain zone near 121K. But higher or lower, what the averages also say is that a full bear market from here is statistically unlikely. Interestingly, a lot of people already accepted the bear market narrative, which makes the situation even more interesting. For me personally, the bear market has not started. I have my reasons based on my own system, just like everyone has their own TA. In the Telegram group, I showed the chart and explained why I can't be bearish here, even though yes, several things look bad and there are clear signs of a bear market. But I don't rely on only one component. If my other stats and charts would flip bearish, I would likely think the same, but for now they don't. So while I want to be bearish in some moments, I can't, simply because I have to follow my plan. And everyone should follow their own. In the end, someone will make money and someone will have to wait. That's how markets work. If it moves lower, then I have to wait for my next chance. If it moves higher, others will wait for theirs. It's not about being right or wrong, but about making money according to your plan. So that's the stats for this month. For now, price opened and moved straight down with no real wick to the upside. Even in bearish months, we often see at least a small wick up. So before moving lower, I would say that even in the bearish scenario, we should revisit the monthly open and form a new high for the month. From there, we will see. Either it forms a range, rejection and sideways, or it breaks above the bearish wick average and pushes higher. Not guaranteed that it hits the averages. It can be lower or it can be higher, but the average sits around 121K. Now let's also mark out the average days for this month. So as we can see, the averages for the monthly highs and lows are formed very early in the first days, which means forming a wick early would actually be normal. For now, the monthly open is almost with no wick at all, which means price is potentially forming the low of the month first. From there, the rise will show us whether it's able to break the bearish scenario level or if it will stay within the range shown previously, where it basically forms the high and low early and then just stays inside that range with a bearish monthly close around 78K on average. And for the bullish month, this is now the aggressive formation of the low, open straight down, then a reclaim of the monthly open and a break above resistance, moving toward the next levels while the average is much higher. Here we can also look at the timing for the FOMC dates that we had. So that the FOMC date stats, and we followed them in the past. On average, there are around 5 to 8 bars on a 2-day chart where we see reversals before the FOMC. Well, now we are basically inside that time window. The first low was made 9 bars before it, which is acceptable. But the window is basically this whole section. So one would expect a low to form around this time window, and the FOMC is on the 10th. That's also basically the first 2 weeks of the month. If we look at the monthly stats, the low also gets formed early in the month, so that can be a really nice time confluence for the low being formed. And not only that, but also the cycles we were looking at on the weekly and monthly charts. I have taken the last two, and we can see that the next one lands on the 1st of December. So while the low can already be in, this still means this is the area where the low gets formed. And to confirm this as a low, we would need to set a weekly cycle low and so on. For that, we can switch to the cycle indicator. And here we can see that we are expecting a daily cycle low to be formed here, which for now is not confirmed, but this is the time window for that and also for a weekly cycle low. We had the previous time window earlier, but price made no new local high and structure was not switched bullish. So the cycle low was not confirmed, and I am basically still waiting for the confirmation. But as mentioned before, that can easily align with the higher time frame cycles. And that's why the one of the lower degree does not really get respected as we move into the next higher time frame. Anyway, that all aligns in this area where price is currently now. And well, for a confirmation, we would need a break outside the trend line or a daily structure break. For now, the daily structure is a bit higher. So technically, this whole area is a lower high zone where people are looking for shorts and simply a lower high. And once it breaks, then it becomes a daily bullish break. Or if price makes a new low, that would bring the structure swing point lower. And we could see a bullish break from lower levels, which for now is not given, and we will look at it if that happens. For now, as said, for confirmation, the trend line is closer than the daily swing high, so a break here would come earlier. Can this mean it ranges until then? Well, yes. It's of course possible. And that would be more or less the month that I showed earlier with the negative monthly scenario, where price moves down and up and forms the wick, but does not really go anywhere and stays here for another attempt to break out later. Or we see now the early rise and then an attempt of a breakout at the same area and confirming the weekly cycle low. And with that, let's switch to our current levels. Here you can see a monthly SR level, a breaker I used in the previous range. I remember it was support that I traded a few times for higher prices, and once this level got broken, it acted as resistance. For now, you can see this level aligning really nicely with the bearish wick for the month. So that's actually a very good level with confluence, whether you look for lower or higher. For me, I would like to see a reclaim of that level. That's where I can aim for higher prices towards 112K as the first target, and from there, based on the averages, higher. But that would need to be an impulsive move because if it ranges and fails, then a possible range below this level is possible. So now we have the level we want to see hold for a rejection if you are bearish, and break and hold if you are bullish. For me, as it stands now, I already explained I can't be bearish. Even yes, there are signs. But I also had signs back at the previous low, and people were loud for lower prices, and they remain loud for lower prices, usually with no clear explanation. But things like a close below the weekly EMA is bearish. Well, I showed last time that the bearish close below is more or less 50-50%, slightly favoring the bearish side, yes, but for me it needs to be used as confluence together with other things. For now, I didn't have the case, so for me, these two moves are stats-wise more or less the same. And well, from that one we had a new all-time high. So yes, if I'm wrong, then so be it. It's not the end of the world, and I will plan the next trades. So I don't really care much about that. But as said, I can't be bearish for now, and I need to see signs on the rise. And if I don't see them on the stats, that means a new high will come. It just takes time. That's a different way to look at the market. So I'm okay if not everyone understands it. But for me, it makes sense to look at it how it is. Mainly for now, higher prices are still possible. And well, that's basically it for the monthly levels. Here we have the averages for both sides, whether you look for lower or higher, the time windows for the lows or highs, and the monthly SR level that needs to be watched, because if it breaks above it, it invalidates the bearish idea. Now let's switch to the local levels. Locally, we have here a few levels. First of all, this daily SR level, which is more or less relevant for now, depending on whether the daily candle closes below it or above it. If it closes below it, then this simply opens the door for the lower part of the range, where we can then see the monthly 50% get hit or the monthly average wick levels. This also aligns with the local swing lows on the lower time frame. That would basically be a sweep of this poor low that price left behind. And if price does not close daily candles below this level, then this means it's holding, and we can see a rise towards the monthly open and the higher resistance level that we have on the monthly chart, together with the average wick formations for the bearish month. So just a few levels to keep it simple, and the reaction on the higher level needs to be watched. Whether you see weakness there and a structure breakdown, or if it starts to find acceptance inside this area, then that would mean it can fill this part of the range. The decision point will be a break above or a rejection below this level. Based on the averages for today, we can see that price already broke the average loss level for the day. But that's not surprising because we simply have a new monthly open and a weekly open. This stuff happens on all time frames. A candle opens and forms the high or the low. While on lower time frames, this maybe looks like a massive move. On the monthly time frame, this is nothing, and just the wick formation for now. If price, of course, starts just to break down, then this will be new information to work with. For now, this is just a normal candle open reaction. So for today, what I simply will do, as I'm not really scalping, I will wait for the Monday range to form in texture, and from there we will see what the week brings, whether we get a Monday range trade or a breakout of it. If we switch to the lower time frames, we can see that on Friday, price hit the 4-hour swing high, which was a target for the price action, but also a target for the rabbit box. So here it was, a really nice take profit at the exact local top with a 10% move. Not bad for one trade. Now, what needs to be watched locally is whether price is able to reclaim that level. If yes, then the target would be at least the monthly open. If we see price struggle here, then the lower prices are possible. Keep in mind, it's a daily level, so only a daily candle close below it is valid for a bearish close. A move on lower time frames means not much, as it can just form a daily wick. And if you see it remains at that level, then that most likely means it holds it for today. So it's an action area that needs to be watched today. For me, I'm still in my trades and aiming higher for 112K, and based on the stats on the rise for a new high or to sell the rally. But I will update if something bigger happens in terms of the statistics. Now, let's have a look at the momentum before I wrap it up. Monthly momentum needs a close above 121K to cross back up. For now, it's crossed down and pointing lower. The 121K level is interesting because we also have our monthly average level sitting exactly there. So while it's a big move, yes, I just present you the data that is possible, and based on the averages we've seen, it is possible. Numbers have nothing to do with my personal wish. I mark them out for lower prices and higher prices if the stats say so. For now, the momentum pressure is down unless Bitcoin closes the month above 121K, which is unlikely for now, but still possible based on the average. On the weekly time frame, the candle needs to close above 98 to 99K, let's say it's an area, to cross back up. A close above that would also be a close above the SR level we had. So yes, that can shift the momentum and confirm a weekly cycle low. Breaking that resistance means simply higher prices toward the next SR level at 112K and higher. On the 3-day time frame, we can see momentum on the lows. It has crossed up and remains up as long as BTC is above 81K. It will close in one day, so we need to check that again then. On the daily, it sits at 85K, basically this local area we had marked out. If price starts to close below it, then we can look to touch the levels we had. If it stays above, then momentum stays up while the local SR level holds. And that's when I can aim for the monthly open and the next SR level. For now, this level is support and not lost, as the day is still not closed. And that's basically it. So yes, there are some signs that it's not looking good, and a lot of people are aiming for a bear market. And yes, I would be happy to join the party, but I simply can't because I follow my plan that I always followed. It's not about wrong or right, it's about following your system. If you follow your system, you can't be wrong or right. You can make money or lose money. And if something makes you more often money than not, then it's something to follow for yourself. That's exactly what I do. So for me, I'm still looking for higher at least 112K. And from there, technically a new high if there will be no signs for a top. If price breaks down, then the stats I have need to be adjusted, and I will do it better next time. Which would just mean that I have to wait a bit longer for the next move up and buy BTC lower. Always trust your plan and learn from it. Don't listen to other people if they try to change your bias without backing it up with data. Stick to your plan. People talk a lot, but only a few show their trades. And I show you the trades. That's the difference. I show when I'm wrong and when I'm right, and we all learn from that. Simple talk means nothing without showing the action. So while everyone is always right because we never see their trades, you will see my wins and my losses. And with that said, I wish you a nice day and see you in the next one.